Good morning, everybody. We'll get started here in just about 30 seconds. Going to be going over what my process is for establishing trade game plans heading into the morning, and then going to look at some of the names and setups that I'm watching for today as we head into the start of the week. Appreciate you all tuning in. Lori should be back, I believe, tomorrow. Don't hold me to that, but if not tomorrow, certainly Wednesday. But I'd say 75% chance she's back in action tomorrow morning for the pre-market shows. So the first thing that I do when I sit down, and again, it's all continuous. So really, we got to go back to last week. Last Friday, I'm paying attention. I'm watching the market all day. Over the weekend, Saturday, I do a market review video where I'm checking in on all the sectors. That's important because it keeps things fresh in my mind. There's not a big gap where there is a lack of continuity in terms of me paying attention, essentially. And I find that when there is that lack of continuity, when I take time off, it takes a little bit of time for me to get back in my rhythm. So if I am not going over things over the weekend, I know that I'm going to have a slower start to the week, trying to get my head wrapped around where everything stands and the different correlations and who's stronger, who's weaker, which sectors are bullish and bearish. So for me, it's really important to be paying attention over the weekend, which I did do this past weekend. So I can see that right now, when I check in on my Fidelity screen, and this is the screen that I watch and trade from during the day, that we're pretty much following through with how we ended Friday. Friday, we had some lead bulls standing out, and that was the biotech sector, and QQQ was certainly a bit stronger than XLF. And as far as who was weaker, XLF was weaker. So as I check in pre-market here, I can see QQQ is set to open higher, IWM, SPY, all set to open higher, and XLF is flat to slightly red. So things are in line with how they were last week, and that's the first thing that I'm watching for when we start the day. And when the bell rings, the first 20 minutes, are we seeing those sectors remain strong and weak? Is there any shift going on? Which individual names in those sectors are standing out stronger and weaker? Because I always want to have correlation in my favor. I have been swinging Tesla, and it's been very forgiving being able to hedge any kind of Tesla pullback because it remains consistently bullishly correlated to QQQ. So I have had a long Tesla position, and there have been times where I am often hedging with SQQQ. And there have been times where Tesla's been green and my SQQQ position has been green at the same time because of that relative strength. So whether it's a day trade or a swing trade, I'm always trying to have the relative strength or weakness in my favor. I shorted XLF a few days ago because it was showing me signs of relative weakness comparative to the broader market, and that followed through for multiple days. Another thing that's important is I am not always rushing to get into a trade. When I'm looking for a trade setup on the morning, sometimes I won't have a game plan for the first 30 minutes of trading, and I will patiently wait for ranges to establish. Generally, it'll be on the 15-minute time frame that I'm looking for something like an equilibrium or really just clarity, and that just comes, you get a certain amount of experience where you're very comfortable with certain patterns, and you just wait for those patterns to show themselves to you. So I never feel like I need to rush to enter a trade in the first 20 minutes of trading. If I am going to be entering a trade first thing, I need to have a clear level nearby that I'm going to be playing off of. So just as an example, let's go with, if I'm looking bullish, I know there are names like NIO that are opening notably higher right now. And I know that the next time NIO consolidates, the most likely scenario is an hourly higher low. I don't need to rush into a bullish position on NIO right when the bell rings. If it runs without me, great. I don't lose $1. It's a missed trade. I go find the next one. If it doesn't run without me and it pulls back, I know that the most likely scenario is an hourly higher low, so I can scout that hourly higher low. I can be scouting 5-minute oversold conditions. I can be scouting a 2-minute falling wedge. There are many different ways that hourly higher low can shape up. But I know that that's just something I can be patient on and wait for. And if it doesn't come to me, then again, that's fine. But it's one of the trade setups where if we see hourly consolidation, I can scout an hourly higher low in NIO. Conversely, if I'm looking bearish, I know there's a lot of names that have a lot of space for an hourly lower high to be the result of any morning strength. TLRY, the Canadian cannabis space. Look at the drop Friday. I know that even if we see a real strong morning, we're just looking for an hourly lower high to be the result of that move. So I could say, all right, well, if the bulls show up first thing and we see a bounce, I can patiently be scouting for a loss of short-term momentum to be scouting a bearish entry. And there are semiconductors that are showing us weakness as well whether it is, let's go to NVDA. So again, same thing with NVDA, that high of Friday is still a long ways away. Whereas the stronger names like Tesla or QQQ or other tech names are testing their high of Friday first thing. NVDA is not testing the high of Friday first thing. So I know there's a lot of space where even if we see a bull morning, I can be scouting a lower high compared to the high of Friday. So I generally have a gauge of I want to be looking bullish this morning or I want to be looking bearish this morning. But again, I don't have to have that. I can let the first 30 minutes play out and then make my trading decisions from there. But again, it's just this rough outline of, okay, I know these are the setups that I am potentially watching for if the trade comes to me. So again, if NIO does not see hourly consolidation, I don't look to make any kind of bullish entry. So as far as the broader market, let's do a check-in on things now. We know that we're looking for a daily bull flag, and it's potentially shaping up. The simple statement is if the daily EMA 12 support holds, it's a bull flag. And right now that's holding, and we can see that if we break the high of Friday, the probabilities that it's a daily bull flag will increase a bit because our daily high or low will be shaping up and we'll be looking right back up at the high of last week for the attempt at continuation. I know that the burden of proof is on the bears to prove to me that we are not forming a bull flag, which means we must break the low of Friday. If the low of Friday breaks, then I'll say, okay, bears, I see you. You're giving me indication that the bull flag is less likely. And I'm going to believe you. Again, I don't have a bias. Well, I do. I have a little bit of a bull bias for this potential daily bull flag. But the moment that the bears show me that the bull flag is less likely, I'm going to believe them. And I'm going to adjust my portfolio positioning and adjust my trade game plan accordingly if lows of Friday break. If highs of Friday break, I will keep my bullish lean because bears won't be proving me a thing. Won't be proving a thing to me. The NASDAQ is the same thing. So daily high or low trying to form, EMA 12 support, high of Friday is in play. And one thing that I am keeping in mind is even if we do break the high of Friday, we will need 4-hour trend changes here. So right now on our futures charts, we're coming straight from the low of Friday into where we stand right now. And there is a key resistance to be watching from Friday pre-market. So if we fail to get over this level after the bell rings this morning, and we can align it, if we're looking at SPY's resistance is 454.57. So if 454.57 does not break on SPY, we reject from that resistance, and then we watch for a 4-hour inverse head and shoulders attempt because we know the bulls will have to confirm a 4-hour trend change back in their favor if we're going to be able to see this daily bull flag try and follow through. So there is that key resistance. If I am going to be looking for a trade, like I said, in the first 20 minutes, I need a level to play off of. So this morning, there is a pre-market setup where aggressive bears are scouting a potential top fish entry off of this resistance level. There's low risk associated with that because if I'm entering right here, right under that resistance, if it breaks, I give some wiggle room and then I stop out. It's not much of a loss. And if I'm correct, then the pullback into 4-hour consolidation, the reward is more significant than the risk. And that's the same setup for the NASDAQ. We've got that same pre-market Friday resistance. And again, if I want to align it with QQQ, it is 364.28. And I am watching that key level first thing because if we reject, 4-hour consolidation may be shaping up. And then we watch for the inverse head and shoulders attempt on the 4-hour time frame. So already I know, just in the first, how long we've been doing this stream? 8 minutes. I now know that I am watching for a bit of a bearish entry. Just identifying this key resistance, seeing that we have not changed the 4-hour trend yet. I know that right now my portfolio is fairly evenly balanced. I have a little bit of a bull lean, so I want to protect those positions, and I will be scouting a bearish entry first thing this morning in case we reject from these resistance levels. And again, if I stop out of that bearish entry, I'll take a small loss on that trade, and my long positions will continue to benefit if that resistance does break. So I just established a trade game plan live in front of you all, and it was based on just going through things, going through the setup, seeing the clarity, seeing the key resistance, knowing how the time frames are overlapped with each other, and how if we are going to see a convincing daily high or low set, these futures charts will need to confirm a 4-hour trend change to the bulls. So as far as individual names today, there is a lot of hype around Twitter. So Twitter with a big gap up open because Elon Musk has established a 9 point whatever percent position. He's been talking on social media recently about, Twitter and censorship and do I need to make my own platform? So here he is taking a huge stake in Twitter. We'll see what that ends up turning into. I certainly don't think he's looking to be passive and just have a big position, but it's a big time gap up. So this is a trade that I know will have volatility today. Whether I'm looking bullish or bearish, there will be significant volatility in Twitter in both directions. So we have hourly consolidation already underway, and one potential play to be watching for is a back burner bounce, which means keeping an eye out for first 5-minute oversold conditions, scouting an hourly higher low. And that would be essentially profit taking on the gap up open, and then we look for that bounce setup. So I know that's another trade I can be keeping an eye on. Because it is a news-related move, then that keeps me a little bit more cautious, but it is still worth watching for the potential of 5-minute oversold conditions to lead to an hourly higher low. So that's another trade setup to be keeping an eye on. Tesla is a daily bull flag. It's one of the strongest daily bull flags in the market right now. So again, it's another name where the burden of proof is on the bears to prove to us that it is not a bull flag. We're going to test the high of Friday. First thing, that's at 1095. And the next resistance after that, we're pretty much just looking at the high of every day here. So 1095, 1103, 1114, 1115. So we're certainly within striking distance of confirming this daily bull flag. I would say that if we're going to fail this bull flag, we need to break 1053 and get into this gap fill at a minimum. So the simple statement is if 1053 is support, the bears are not proving anything to us on Tesla and the bulls are keeping their complete control. I personally am still in a swing position from a couple weeks ago, so I'm not looking to do anything on Tesla. It's just a question of, am I going to be looking to hedge? I'm going to let Tesla daily consolidate here, whether it's a bull flag or not. I'm looking to hold this position longer term. So I will look to hedge my Tesla exposure if I start to see any signs of weakness. But again, there are no signs of weakness right now, and we are going to be testing resistance first thing. Looking at IWM. So IWM showed us a little bit of a red flag. So we had this clear resistance at 208.64 and 208.38, a little double top, and we finally got over it with a big green day on, what was that, Tuesday? And that was, all right, convincing bull move, and we're going to follow through now as far as being laggards to our more bullish, more important sectors in the broader market. And then we gave it back real quick. So that's definitely a red flag. It's a breakout, giving it right back. So the bulls must prove to us, for me, the burden of proof on IWM is on the bulls. And you can see now that I've gone through these different names, the burden of proof is on different sides of the trade depending on the setup. So for me, the burden of proof is on the bulls to ease my concerns about that breakout with zero follow through, which means we must see a solid green day today, establish the higher low at 205.01 and head back up to that recent high. So I'm watching IWM very closely this week for the potential that we either maintain the daily uptrend or we see weakness and shape up weekly consolidation. And so with that, I know there's a bunch of sectors that I'm interested in that trade correlated to IWM. So XBI was a lead bull sector Friday and is trying to gap up open pre-market. So I can say that XBI is positioned well for any IWM strength because of that momentum that we see here. And if the bulls break 94.56, we're at the highest level in over a month. We're then looking at 95.97, and really 99.16 is the key level for me, bigger picture. But the back test and hold of this EMA is very important for me because it has acted as resistance for so long on so many names. So to just be grinding this but continuing to hold it is obviously a good sign for the bulls. So I know that if IWM sees strength today, that XBI bulls are strong as well and could benefit even more. And it's another name where I know next time we see hourly consolidation, it's all about determining what is the most likely scenario. And when you're a newer trader, that's hard to do because you haven't looked at 10,000 charts to know what the most likely scenario is. But eventually, with enough experience and enough hours put in, you start to say, okay, well, we have this much space. We can retrace this much and still be looking for the higher low. So I know that for XBI, the next time we pull back, the most likely scenario is we form a higher low compared to 90.96. Now, I can't say where that hourly higher low is going to form. It could form at 93. It could form at 92. I have no idea. But that's when I zoom into the 5-minute time frame to look for clues and indications that that hourly higher low is forming. So that's another name, just like NIO, where I know that I will be scouting an hourly higher low on XBI the next time it consolidates, as long as I don't have any red flags on IWM. So it's important for IWM bulls to be convincing today and breaking the high of Friday and maintaining an hourly uptrend. With that, TAN correlates to IWM as well. I know TAN is going to see volatility this week. How do I know that? Because I looked into my crystal ball. Just kidding. It's a very tight range. We know it's extremely tight. And when you get this tight, a break and a volume spike are imminent. The most important support for me is 75.07, but we'll call it 75. And the most important resistance is 78.15. So we're either going to see a bear break into weekly consolidation or a bull break into bullish continuation. And again, it doesn't have to be today. It could be tomorrow or Wednesday, but we know that a break is coming here. And again, the volume spike will be key, because the day that we see the break, we will likely see the volume that we've seen here, which is what, 687, we'll call it roughly 700,000 shares traded 4 days in a row. We will see over 50%. We'll see over 350,000 shares traded in the first hour and a half of the day. And that will tell us, okay, we know that we're likely to see increased volume today, which means we have increased probability of this range breaking because of that volume spike. So we're watching the price levels and volume for clues that the break is coming. And there is a wide bid and ask spread between TAN. It's less liquid than other ETFs, so I don't love it. I don't trade it a ton, but it is something that I keep an eye on, and it is a nice tight setup. Other than that, we got oil in a 2-day equilibrium. We got 5 more minutes here, so I'm going to go rapid fire. Oil is in a 2-day equilibrium. We are scouting a 2-day higher low, anything above 92.20. Bulls are looking for an entry to start this week, knowing that that support level is there, and it looks like the 4-hour sideways range just broke bull. So this is the kind of scenario where I would already want to be in a position at this point, which means I would need to be trading futures or pre-market. But it was just a nice 4-hour tightening range breaking bull, significantly increasing probabilities that the 2-day higher low is forming. So if I do want an entry here and I don't want to use 10% risk stopping out on 92.20, I'm now assuming that 97.78 is the higher low. And I can say on any trade setup that if 92.70, or what is it, 97, if 97.78 breaks, then I am wrong. The 2-day higher low is not set, and I would want to stop out. So any bull trade that I take from here would be under the premise, under the assumption that the 2-day higher low is set. And then from there, we're going to look for a lower high into this week, and we can trade within this tightening range into next week fairly easily. But we know the bulls do still have some proving to do to get back into this range, but it's nice and clear and tight. And we know after massive volatility, we scout equilibriums. We've been scouting this equilibrium for the last 3 weeks. We knew it was coming as the most likely scenario. I could have said 85% chance we will form an equilibrium as a result of this volatility. And so here it is shaping up. And again, get familiar with equilibriums because they happen on all time frames, all the time in markets after volatility and preceding volatility as well, because we know when this breaks, volatility is going to pick right back up again. Miners are considerably stronger than metals. GDX is testing its high from the last few months of 40.26. We're trying to gap up open. 40.26 is 2% away. So we're testing that high, and we look at gold in comparison. We are nowhere near our high. Gold is trying to prove to us, burden of proof is on the bulls for the metals, gold and silver. They have to prove to us that our weekly higher low is set off of EMA 12. And again, I do have some positions here, and my stop loss is under this level. And if the low breaks, I am out of metals because the bulls will be failing to show us that a weekly higher low is forming. So gold bulls must confirm a daily higher low and higher high here, getting over the high of last Wednesday. Silver as well, same setup. And I know that the bull miners are positioned very well if we see a weekly higher low set in gold and silver. So clear comparative bullish correlation. And just checking in on Bitcoin here, we've got a tightening range that we've been trading within. And short term, well, actually, let's go to the daily. So daily, we're watching, is this a bull flag? Same question as the broader market. And it's possible that we continue to tighten up here where we've got our high, our daily higher low is set. This may be a daily lower high. And if it is, we pull back and the bulls then must hold 44.2 thousand to keep the daily higher lows going. If we break 44.2 from here, we confirm a daily downtrend and weekly consolidation is then underway. We've got the Bitcoin conference starting in a couple days down in Miami and watching for any potential headlines that are coming out of that. But a short-term range that we just double topped and double bottomed within is in play, and looks like we're heading back down towards support. So we've been trading within this range for a whole bunch of hours and watching for clarity in the short term when this breaks. And if it's a bear break, then the probabilities certainly increase that a daily lower high is set and that this tightening daily range is going to potentially continue for the next couple of days. So that's where we stand on the morning, and that's how I prepare. Some consolidation here in QQQ means that we have top fishing plays as well. QQQ high of Friday, 360, 361 is a top fishing play of resistance. So aggressive bears are watching for inability to break highs of Friday for bearish entry opportunities. All right, I'm wrapping it up. I appreciate you tuning in. Lori will be back tomorrow. And now I'm going to go do my open live stream for Chart Guys members. Have a good rest of your morning. Best of luck. See you soon.